Let's get started with talking about the Philo deal that was announced a little over a week ago, and then Cisco yesterday. So Philo is 4.5 billion or 4.3 billion, I think, and Cisco is over 2 billion. It seems like the M&A is really heating up right now. What do you make of that? Is this the start of more M&A?
Yeah, I think I think M&A is picking up, financing activity, the amount being raised, the number of deals. This has been, it's been a good year. I know it doesn't always feel that way. We look at some of these mining equity prices relative to where the commodity prices are. But look, like this reminds me of past markets where, I'm looking up at gold going through 2,500 on the December futures. And, it reminds me of 2006 where, gold broke 500 and the equities didn't move, but it ended up going on a run to 730 and the equities went up 500% across the board. And prior to that, you saw the big deals go down, whether I remember at the time it was Newmont putting $100 million into Shore Gold, which was a diamond play in, I think it was Saskatchewan at the time. But whether they're big investments or in the case of the Philo deal or the Cisco deal. But, I think, the Cisco deal is really interesting because it was a cash deal. And I think we're in such a different time today. It's so early in this market. If I was running a company and I thought my stock was overvalued, I would offer out my shares. If in the case of the Cisco deal, the fact that the cash was given, not shares, I think really highlights the fact that the companies are viewing the cash as something that is losing its value, and their shares are not fully valued. So I think that's a really important moment in this market. Listening to Bristow talk yesterday from Barrick, and he made a move to buy Newmont a few years back, and then he made another big swing in copper. I wouldn't be surprised if he made a move like that again. So I think there's some big M&A, on the horizon, like at a very, 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 very high level. I think the market is poised to move a lot higher. And I think the setup is incredible.
Yeah, that's a good point you make about if you thought your shares were priced highly, you would use it as a currency in transactions, and you would not put as much cash, into the deals. Cisco is an all cash deal. With Philo, it's not all cash, but it's mostly cash, and that's a very big dollar. That's a big dollar number. So there's a lot of cash there, and I wonder if what we saw, yesterday in the sector was some of that cash being moved around a bit, people taking profits in Cisco or in Philo, and they're sprinkling into some new names. Um,
On that point,
yeah.
if you look at the way Skeena traded yesterday, it had closed Friday at $7.88. Closed yesterday at $9.67 on 1 million shares, 3 times the volume it traded on Friday. So I think Skeena Resources, the market's making a bet that they're next. There was, money came out of Cisco and went into Skeena.
Yeah,
That was one of the best, benefactors.
Skeena and Bonterra were the big, winners, and then you had a bunch of stocks up 10%. Like Dolly Varden was actually up 10%, I think. Okay, so let's talk about Dolly's results that she put out from the Wolf vein. So 1,091 grams per ton silver over 9.38 meters at the Wolf vein, and I mean that's an impressive intercept. That's a nice headline for a silver junior, for sure. So, what can you tell us about that? And I couldn't help but to notice that there's assays pending, or for I believe three more holes in that same area.
Yeah, so I've been asking industry legends, titans, successful mining executives to share with me, tell me about a silver company that's growing, that's making discoveries. And they really have to think hard. And some of them might come up with two ideas, two companies. And think about that. Like, we're in a world where how hard is it to get exposure to new silver? And what I really celebrate in Dolly, and what I think, what makes silver equities so special, is they're really, 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 really rare. And so we've got a project that was a producer. It's got 64 million ounces of silver in the ground and a million ounces of gold. And we're stepping away from known deposits and seeing if we can grow them. And Wolf demonstrates growing pure, high grade silver. And in order to run the program as efficiently as possible, we used a technique called directional drilling. So we drilled what's known as a mother hole. So we drilled, 300 meters in this mother hole. And then we drilled from that these daughter holes. And the daughter holes don't have to drill the first 300 meters, so you save that. So we estimate on the 25,000 meter program we're going to save $1.6 million. We will be able to, you know drill less and therefore save money. And so we do have assays pending from other holes that are around this new 40-meter step out, where we tagged a kilo of silver almost over 10 meters. And that's an exceptional result. So we do have assays pending. We've also completed a total of about 20,000 meters of drilling. So in addition to the assays pending specifically at Wolf, we've also got three rigs that are turning up at Homestake. And you'd remember last year we drilled, we hit a new gold zone where we drilled 12 and a half meters of 79 grams of gold next to the million ounce gold deposit we have up at Homestake that's got 20 million ounces of silver included. So we've got a lot of drilling to do. And I've been advocating for an expansion of the program. And so we're going through the targets, we're going through ranking the meters, and I think there's a really good chance we go and we drill beyond 25,000 meters. So in addition to the three rigs that are turning, and the dozens and dozens and dozens of drill holes that we have pending, I think we'll be drilling more. So I think we'll be reporting right until the end of the year with news flow. And the one thing you talked about the market. Dolly was up at about $1.30 a share Canadian, and with silver pulling back from 32 to 26, we took a haircut from $1.30 down to 90 cents. Now the results that we put out yesterday have helped us get through a dollar again. But in addition to making more discoveries, if the silver price starts to head back to 30, and with gold over 2,500, I would suspect that a 90-to-1 silver to gold ratio is not sustainable. I'm pretty bullish on getting exposure to silver equities right now. And this is one of maybe two, maybe three names globally that is growing high grade pure silver.
There's a few things I want to follow up on there, but let's start with expanding the program first. So 25,000 meters is a pretty substantial program, especially in the Golden Triangle. So expanding that, I mean, that tells me as an investor in the sector that you like what you're seeing, and the results that you're seeing are giving you confirmation of your planning, and you want to keep following up because you're getting, solid results, with the drill. With Homestake Maine, I mean, this is something. I mean, I guess so. There's the two Homestake deposits. There's the silver, and then there's the Maine, and there's that gap zone that's open, and that's been something you've talked about quite a bit in the last year. And I know you've been testing that area. What can you tell us about what you're seeing there in that gap zone, and how many holes, are we expecting assays from there?
Hmm. Great question. I want to just touch on the meters for a second before I go into the drilling up at Homestake. The companies that have been successful have drilled. You look at Osisco. Osisco had regularly had 100,000 meter drill programs. Great Bear, another example. I was down at the Rules Symposium where you and I got together and we did, an in-person interview. At that symposium, I ran into the chairman of Agnico Eagle, Sean Boyd, who has built a top three gold miner. And I asked Sean for some advice with Dolly Varden, and Sean's Boyd's Agnico is a shareholder of Fury Gold Mines, who is a 19.9 shareholder of Dolly. So indirectly, Agnico has some exposure to Dolly. And so I asked Sean for some advice, and he said, drill. Basically like drill, baby, drill. Like just good things happen when you drill. And so. And that's what I've seen at Dolly Varden. This project saw very, very little drilling. And when we were able to put some meters into it, good things happened. Good things happen when you drill next to past producing mines. And so, in terms of Homestake, look, I don't know what the assays are going to be. I don't want to speculate on. I just want the numbers to speak for themselves. And right now, the numbers that coming out of Wolf are spectacular, and the numbers that we've put out from Chance and Moose have been really, really encouraging. So we've got three areas that we wanted to focus on. We wanted to focus on validating the idea that we can continue to expand known deposits. So Wolf is a great example of we've put 8,000 meters of drilling into Wolf. We've got a lot of holes pending from Wolf. 1,400 meters away, and every 1,400 meters you got another one of these veins, Chance, Moose, Wolf, Torbrit. And so we had, a lot of success on the property-wide regional exploration part of the program. And then the other bucket is the Homestake bucket. And I don't know what that gap zone is going to deliver. We'll let the assays tell the story. I'm really proud of the way Dolly discloses information in terms of, we don't, we're not overhyping anything. We're just letting the numbers speak for themselves. And so, if we're able to fill in that gap zone, great. If what I've found though is expanding and extending these deposits has we've already won this year. The biggest risk bucket we had for our exploration program this year was the drilling we did up at Moose and Chance, and the fact that we converted up there is huge. We came out of the gate 2 for 2, and this Wolf drilling 3 for 3 now. I hope it keeps going. You know, it's been hard for me because in 2022 and 2023, the best drill results that have come out of the Golden Triangle have come out of our project. So we've created a very, very high bar. In 2022, we drilled 25 meters of 46 grams of gold, 1,500 grams of silver over 15 meters. Like, I stressed out over the fact that how do we keep this up? And so when I get an assay like 9 meters of 1,000 grams, it's almost a relief that comes over me that, okay, good. It keeps going. Fantastic. But then as I step around and I look at the whole market and the whole world on a global perspective, and I ask myself, who else is doing this? You know, Vizsla Silver, but beyond that, there's two companies that'll give you, if you want to grow your silver, those are the two companies that are doing it, Dolly and Vizsla.
Yeah, it's true. I mean, there's not much to choose from in the silver space, and even both of you guys have a large amount of gold as well. I mean, a good portion of the economic value in the ground is gold, although a lot of high grade, silver, as well, and that's what makes you a silver company. Um, so, what makes the Golden Triangle so special, Shawn? I think this is not that well understood by a large segment of investors. Why is it a special place to be an exploration company?
Well, I think the biggest challenge you have with any project is social license. Um, you know, it's if you can't get whatever you're looking for out of the ground, what does it matter? And I just think that there are some tremendous projects that are out there globally, but they're in counties or they're in states that don't want mining. And if they do, then the other challenge you face is water. How do we get water to the project? And so what makes the Golden Triangle the most special is, I think, the people. The fact that the people are screaming for jobs and employment opportunities, and they're screaming for mining. And they've had a history, a 100-year history of mining being woven into the fabric of the culture and society. And so why I think the Golden Triangle is special for me is the people are incredible. There's something special. Like I grew up in the suburbs. I grew up in essentially a city, and the biggest takeaway for me was when I went up north was how people work together and helped one another, and it's a pretty unique and special way of life, and it's just it. I'm surrounded and work with some of the most incredibly hardworking and grateful people that I've ever come across. And so the people are what make the Golden Triangle special. Um, but what makes it, beyond that is the geology is the richest on the planet. And the neat thing for me is this is an area, because of where it's located. This is not next to, 100 years ago, it wasn't next to a paved highway with power and a deep water seaport, but it is today. So for so long, this was an area that was too expensive to explore or develop. Despite that, companies like Barrick and despite lower gold prices, projects were so rich and so incredible, like Eskay Creek, that gold mining companies still went up there, silver mining companies, copper mining companies still went up there and made a tremendous amount of wealth for the local communities and their shareholders, even when metal prices were low. And so, what makes the Golden Triangle special? So, in the first 100 years of the history of the Golden Triangle, there was 5 million ounces of gold identified. Okay, in the last 30 years, there's been 150 million ounces. I'm going to say that again. So in the first 100 years, 5 million ounces of gold. In the last 30, there's been 150 million ounces of gold discovered. In addition to the 155 million ounces of gold that have been discovered in the Golden Triangle, there's been 1.2 billion ounces of silver. And the silver, let's just take the Eskay Creek for project. Okay, Eskay produced 200 million ounces of silver at 2,400 grams per ton. This is an area that rivals the greatest precious metals camps anywhere on the planet. Argentina, Mexico, Chile, Peru. You go into different parts of South Africa, Australia, anywhere on the planet. these numbers hold up. And what's crazy is the rate of discovery, the prospectivity. So it's people, it's geology, and then it's also the fact that the government recognizes we need to support industry. We need to support our First Nations partners. We need to bring employment opportunities. We need to reduce the cost of capital. We need to reduce the cost of exploration. So the BC government has paved roads. They've assisted in power. They've assisted in the deep water seaports. And it's just a culmination of a lot of things that are working right. And it's what's been crazy for me to witness is this has happened with right-leaning governments, left-leaning governments, and you've got certainty. First Nations have signed benefit agreements, and they've signed land settlement agreements. So you have total certainty in the Golden Triangle in terms of title, and you've got the prospectivity, and you've got shareholders that are recognizing all this. And the most important thing for me is the fact that Newmont and Teck are here, right? And so when you have the biggest miners in the world having a presence, Newmont operates the Brucejack and they operate Red Chris. So you've got, the world's biggest gold producer with a very, very big operation. And despite, when Newmont and Goldcorp merged, there was a whole plethora of assets that came with the merger. A lot of those are on the chopping block, right? Eleanor, Musselwhite, they are getting off a lot of projects, divesting. They've got a very, very high standard of where they want to operate and how much the production they want to see. They want 10 million ounce deposits. They want 500,000 ounce a year production profiles. The Golden Triangle supports that size. And I'll leave you with one final thing, is the way the Nishka, the Taltan, Newmont, and Teck plan is for the next century, not the next year, not the next decade. And the Golden Triangle supports, because of its endowment and because of its strong partners, because the 100-year history, we're looking ahead at the next 100 years. And that's why, I remember 10 years ago coming across Walter Coles with Skeena Resources. And actually, as recently as 5 years ago, Skeena had a $35 million market cap. Today, that market cap's closer to $1 billion. Recognizing that, we've got this shift in the world that is making precious metals more attractive. Let's focus here because the people want us, the geology is right, and the government's supportive.
Yeah, I think that's really well said, and that's probably not the first time that you've laid it out like that. You're pretty good at it. And I think what really resonates with me is that the best assets, they are long lasting and they last way beyond politicians and whether it's a left government or a right government or whatever the government is. And the tall 10 are very supportive of the mining industry. And you can't say that for all the First Nations in Canada. I would say that they're probably the top one, that's very supportive of the sector. I want to ask you a question that doesn't specifically pertain to Dolly. So to take off your Dolly hat for a moment, although it could apply to Dolly at some point in the future. I've been looking at the different gold and silver miner quarterly reports, like with Barrick. They generated a substantial quarter with a lot of free cash flow. They're guiding to 340 million of free cash flow full year 2024. Q2, their average gold price per ounce sold was 23.44, and they had a fantastic quarter. They beat all the estimates. So that was at 23.44. Well, I'm looking at the futures right now; they're above 2,500. So if this gold price holds up, or even if it drops $100, they're still going to have a very strong year of free cash flow. And the same with Hecla. Like I looked at their quarter their average cost per ounce of silver, 12.50 per ounce, and that's all in cost. Their average price sold was 29.77. So 12.50 cost, 29.77 sales price. That's a pretty fat margin. And Hecla had a lot of free cash flow in the second quarter, and they're guiding to even stronger free cash flow in Q3, Q4. And those are just two examples. There's quite a few more that I could expound upon. But if these mining companies are starting to generate all this free cash flow, what do they do with it, Shawn?
Um, that's a really good question, and I think I've observed a sector that has not been very proactive over the last couple of decades. We saw a sector that, when the gold price lifted above 300, I guess it was 20 years ago now, the sector reacted, and they went from an industry that collectively had, $2 billion or or about $1 billion in debt, and they put on 40 billion in debt because they were going, oh well, we're into this new gold price environment. We need to go out. We need to grow. We need to grow. We need to grow. We need to grow. So there was a whole swarm of acquisitions. There was all these development projects that they launched into. They took on tons of debt. They issued lots of shares, and unfortunately for shareholders, it despite gold going from 250 an ounce to 1900 in a 10-year period, the gold stocks didn't do that well. As an industry, as a sector, they underperformed the metal, and there were some exceptions, but and so I think that because of that recent experience, there has been a desire to pay dividends. You look at, I think Newmont paid 25 cents per share. They're going to have about 2 billion in earnings this year. Um, so I just think that as much as I want to say they're going to take that cash and they're going to go out and they're immediately going to go to growth, I think it'll be on a very, very case by case basis. There are going to be some miners that are just going to want to stay lean and really focus on dividends and on being disciplined and being in a position where they really listen to shareholders. Because at the end of the day, at the top of the table, you've got your shareholders. Then you've got your board, and then you've got management. We're all working for the shareholders, and so it's only so I think that at the end of the day, though, as a miner, you've got to replace your inventory. So and we've seen, I think what's working for a lot of companies that are in the development space or in the exploration space, because those majors were so sensitive to cost overruns and really trying to run lean businesses, they gutted their exploration departments. So, really what they've gone out and done is made strategic investments into specific explorcos to gain exposure through exploration, but without having to manage that business. Just passively work as an investor, and if that exploration company is successful, you've already got some skin in the game, and it's much easier to drive a takeover if you own 10, 15, 20% of a company. So look, I think it's going to be surgical. There will be investment into, and there will be takeovers, but I just think that it's like the first inning in this process, and we're a long way away from competitive tension and multi bids. And but yeah, ultimately, look, what do if you're a gold miner and you're making record amounts of cash, and investors own you because they don't want to be in cash, they want exposure to that metal. You got to get them more metal. So I think you're going to see mergers, you're going to see takeovers, you're going to see direct investments. They're going to take that cash, and they're going to put it to work. But I also, and what a great time to do it. You've got unfunded developers in the gold side trading at 0.25 net asset value. You've got funded developers trading at twice that, you know, 0.5. You've got, you know, junior intermediate producers trading at 0.75. You've got producers trading at 1 times NAV. Um, we'll get into a market. We'll forget the NAV estimates. You know, there'll be 2, maybe 3 times net asset value in some cases. We'll get into a market where investors will pay for prospectivity. I've seen cycles where a company's valuation will be based on how many hectares they have staked. And that's when you know it's time to hit the bid and sell.
Yeah.
But in a moment right now, I could show you companies that are trading at $3 a gold ounce in the ground that have good high grade ounces in safe
Hmm.
jurisdictions, and the market just doesn't care. They don't care. Nobody believes, and it's all a flow of funds. Like, this is the most boring sector in the space. You know, why play here when, you know, the Chipotle CEO leaves and he signs up at Starbucks, and Chipotle goes down 10% and Starbucks goes up 20%. The delta there is 30% with all the liquidity in the world. And that happens in the first couple minutes of trading on a
Hmm.
US big board. Why
Hmm.
would you? Who's talking about Newmont, Barrick, and Agnico today? Nobody.
Nobody.
There's a
Nobody. Just us.
few dozen of us, right?
Just us. The lunatics like us. If somebody has a question for Shawn, we'll take one question. I do recognize a few friendly faces in the audience. So go ahead if you'd like to speak. Go ahead and ask, and I'll activate your speaker capabilities. That's a
I just want to shout out Tom Wolf for supporting us out there. I see you here listening, and I just wanted to say we appreciate your support.
very cool, Tom Wolf. Um, a couple of things there that I found really interesting. I like what you said about $3 per ounce of gold in the ground. Like that's like $5 per ounce gold in the ground, $6 per ounce gold in the ground for quality ounces, quality management team. Like that's probably not a sell. That's probably closer to a buy or a bottom. And then when the sector flips, which I guess it did briefly in 2011 at the top, in 2006, 2007 at the top, where you're valuing companies on their land position, which is completely insane. I mean, that's really doesn't make any sense at all. But it can get crazy like that, and that's the time you want to be selling all your stock. That's not where we're at today. That's for sure. Um, so, final question from me, Shawn, and then you like maybe you can tell us about what to expect from Dolly over the next couple months. But do you think that a company like Barrick or even a Hecla, do you think that their criteria for making acquisitions depends upon more on the value of the prospect and how good a deal they're getting, or their own balance sheet and how strong they're feeling in their finances and their share price?
I think there's so many things to consider. It's a great question. I think the first thing is like listening to shareholders. Do shareholders want growth? Looking at your own paper. Is your own paper overvalued so you can use it to acquire? But ultimately, to make any decision, I think what one has to look at, and I have had the privilege to get to know Phil Baker, who ran Hecla for 23 years. The company has been around for 130 years, and from being around people like Phil, what I understand about the mentality of a company that produces, that has multi billions of market cap, is it's a commitment to a district. Newmont is not going to come into the Golden Triangle, unless they see a much bigger plan and play and commitment. They need to see something that is going to have, they want to see decades. They want to see decades. They want to come in, and there's a certain, every time, like if I was meeting I've been meeting with a lot of corporates lately, and I was talking to one corporate that's producing in 3 different countries. And they've recently opened an office in another country. And they said, look, every time we open an office, it costs us $1 million. It costs us $1 million just to open an office, just to get the country manager, the legal, the accounting. It's a commitment. And you've got to think that, when everything is about the bottom line, running your business in the most streamlined way, if you can just come into one camp, right? You look at Nevada, for example, and you look at like the fact that you've got some of the biggest gold miners on the planet. It's all there in that one district, and so that's where I think you look at these big camps, and this is why like one of my directors, Rob McLeod, said, look, we should focus on the Golden Triangle because it's a camp that, because of the Jurassic aged Hazelton Formation and these big deposits, the 155 million ounces of gold, the billion two silver, it is enough for the big boys to come in and feel confident and comfortable where they've got that outlook. And then the other thing that I'm learning is, getting a district scale project is so important, because as you understand the geology and as you put it all together, whether you're got a brownfield site or whether you're producing, getting that understanding is going to help you further unlock the value of the district. And it's one of the reasons at Dolly Varden that I've done consolidation. So I came into Dolly in February of 2020, and after a couple of years, we did the homestake acquisition. As we got comfortable, we started to understand that there is a periodicity, a repeating pattern, and so we thought, well, let's grab this homestake deposit, and every 1,400 meters or so, we should find another system, another vein. And so we consolidated that. That led to the company growing from 20 million to 200. We just tacked on the big bulk, getting the copper gold feeder system. So, I think regional consolidation will continue to be an important part of our future. But you asked about catalysts and what to expect in the coming weeks and months. We've been drilling. We've got over 50 holes drilled. I think we've put out 5. So we've got 45 drill holes to report. Plus, we've got 3 rigs that are drilling another 3 holes right now. And so there'll be dozens and dozens and dozens and dozens of drill holes. I anticipate reporting imminently and often. And in addition to exploration news, watch us continue to be active on the corporate development front, on the regional consolidation front, and we are as much a target as we are looking for being that growth engine and being that consolidator. With silver going from 25 to 30, there's a lot of silver miners, as you pointed out, Hecla, selling silver at 29 and operating at 12. It's a great margin business today, and it's a great time to expand and enhance your development pipeline if you're a silver miner.
Thank you, Shawn. Great conversation again. Thanks everybody for tuning in. I think we hit on a lot of important points, and I'll see you in Colorado in September.
Sounds good. See you at Beaver Creek. Take care.
Cheers, buddy. Thank you.
Bye-bye.